Yeah, start the recording so that I don't forget it. Arvind ji, good morning. Soumya ma'am, Anish ji, Yatish ji, everybody, good morning.
Good morning, everyone.
Good morning.
Good morning, everyone.
Good morning.
Arunji, I think you have to make me as the host also.
Oh, yes, yes, yes. I'm sorry. अर्पित जी आपको भी co-host कर दिया है. Yeah, let me just put it in the group. Okay. Yeah. So good morning, everyone, and thank you for joining in another wonderful Saturday morning session, which we say as SMS. So now the SMS is favorite. I was recently in a hearing in Patna. Suddenly, officer says, "अरे आप तो लेकिन अपने group में ये बता रहे थे." I was just surprised as to how he came to know. Then I got to know that somehow he's got the link to our faculty group YouTube video link, and he watches it after we have this. So I was really happy to know that many officers, they're also being benefited from this, the kind of discussion. And because of it, he was sharing that many of the things are getting clarified even from there. So I think that's a wonderful thing to know. So with this, we'll start with today's Saturday morning session. So we are really privileged and proud to have Shravan Prabhuji again to share the sequel. Like, we had Bahubali 1, 2 and all. So members were requesting we should have a sequel to this. I said, yes, I'll seek the consent of the speaker. And we got the consent. So today we'll take the journey forward. So what do you, sir, to take the journey forward?
Yeah, thank you, Arunji, for the wonderful introduction. So I think, yes, so in the last session, again, we were discussing a few, the ideas, topic is GST on cross-border transactions. So we are restricting ourselves or limiting ourselves to cross-border transactions, point number one, and GST controversies and beyond. So what we have really done is I've taken a few cases where I've been privileged to be part of, and these cases are real life cases. I'm discussing not any hypothetical this one situations or anything. So these are real life cases where I've been part of. And probably many of these cases also, many of our esteemed members are seeing reported in the newspapers, so on and so forth, either in, various across various cases and such cases like that. And apart from the GST controversy which is existing and beyond. So therefore, what is probable controversy also? Because these some of these cases which I'm telling you now are at a very nascent stage, at adjudication stage, and even little bit earlier assessment stage also. So therefore, these cases probably will be controversy beyond. Sometime in the future, you may see that this may be an industry-wide issue, so on and so forth. So that is the theme of today's topic. So it's going to be something more than reading of the provisions of the law. We are going to really apply it to the facts of the case. So I think that is befitting this esteemed audience that I'm going to address today. So therefore, with that small introductions, the last session, I think we took two cases. Even that time was not enough. Even I had to rush through this corporate guarantee, this thing, even though so many, I had nearly 14 hearings on this matter, very single matter, but we tried to condense it in like some 15, 20 minutes or half an hour. But anyway, we tried to do that justice. And we saw, I think, one more case with respect to intermediary where we had a really good discussion, very deep discussion we had. So I think befitting that, similarly, I'll carry on with another case, again with respect to cross-border transaction. Second. So just a second, I'll take up another case of intermediary. One second. Yeah, that is better. So again, why I'm harping on this concept of intermediary, as all of you are aware, this is one of the subject matters where number of circulars have been issued. So as you can see, even in the 200s range of circulars, nearly 3 or 4 circulars have come just on various industries as to which will qualify as intermediary, which will qualify as export of service, so on and so forth. Please note this has a direct bearing on the refund also, because all these transactions, if they qualify as other than intermediary, typically they fall under the general rule or general clause 13 subsection 2. Therefore, they are entitled to the export sort of zero rating benefits and refunds also. Whereas if they fall under the concept of intermediary, they come under 13 subsection 8 of the place of supply provisions, and therefore you're not entitled to the refund and the other zero rating benefits. So therefore, these have a direct bearing on the refunds and the zero rating benefits. Therefore, we'll take up this particular again case, which is a very live case. I was again privileged to be part of. I should thank my colleagues for trusting me with this case also. So a real life case we are going to discuss. So I'll take you through the facts of the case. Aram say we'll just go through the facts and we'll take a deep dive. So today I have 3 broad cases, and within that, a lot of sub cases. So if you're able to complete at least 2, I think I'll be very happy with that. Impact. Now, the first of that is a company. Look, these are the facts of the real case, which I'm going to discuss now. So the company is engaged in providing ship management services, including technical management. Now, I'll just take you through, instead of reading through the PPT, I'll just take you through how really the ship management service will work. Now, this is a case, real life case where, let's say, company A is or B is there. What it does is, let's say it's in India, somewhere in India, let's say it's in India. Now, it provides various services to foreign vessels and foreign companies, foreign entities. So these foreign vessels are outside India. Neither you can imagine. These are incorporated probably in certain tax havens and certain countries like Singapore, so on and so forth. So across outside India, they're located. Let's say the foreign entity is owning some foreign vessels. Now, what happens is typically these companies, foreign vessels, they give, you can imagine a vessel, a ship, you can imagine. It will have n number of components. Thousands of components will be there. Now, this managing of the ship itself is a unique aspect or a unique service that companies provide. In which case, there are various management services. One of them is called as technical management. What is this technical management? So as you can see, this particular ship, thousands of components will be there, and each of those components have their own life cycle. So you'll have to monitor them on a regular basis. You can imagine ship being in the high seas for like 3 months, 6 months put together, a year put together, it can be there. So entire monitoring will be done in a remote manner. Sitting, let's say in Mumbai or sitting, let's say in Delhi, people will be monitoring it across from a remote manner. How all the components, are they performing? Are they underperforming? Is there some issues? So on and so forth. The monitoring will be done. So after that one, they'll also give periodic reports to the owners for outside India. They'll give periodic reports. Like, okay, this is what has happened. This is what we have observed. All these are okay. So on and so forth. So this is technical management. Apart from that, the crucial aspect is, in case some problem happens, in case some repairs and maintenance are required, something is breaking down, etc. The ship, let's say it's landing in Nhava Sheva port, right? So there something is happening, or let's say it's landing in Singapore, or let's say it's in Monaco, somewhere. It's landing, there's some repair that is required, because please understand, in this 3 months period, it will hardly make a few calls across the world. So wherever it is docking, where any repairs is due, it will be done. So repairs and maintenance, whether it is required for any particular aspect of the vessel, that will also be monitored. And whenever a ship docks somewhere, the repairs and maintenance will be carried out. Now, please note, this is where the crux of the matter comes. Now, what will happen? This B in India, it has no capability to do any of this repairs and maintenance. What it will do? It will identify certain vendors in India, or let's say wherever it is. The ship is in Singapore, somewhere in Singapore, Australia, somewhere in Australia. It will identify certain vendors. Now here, let's assume it's in India, because then only the controversy comes. Let's say ship is docking in Nhava Sheva, certain vendors are being identified, A, B, C, like that, so many X, Y, Z, like that, so many vendors are being identified for this particular repairs and maintenance aspect. Now, please note, all these vendors who are there, they are already empaneled with the foreign vessel. This vessel, foreign vessel, already has list of empaneled vendors, because they are not operating 1 year or 2 years. They'll be operating like for 10 years, 25 years put together. So across all countries, they have a master database that these are the persons who are there, who probably in this port, nearby this port, these are the vendors who will be able to provide this service. Now, then what will B do? So there's a very critical aspect which I'm telling you. These are already empaneled vendors. B is not identifying those vendors. They're already empaneled. Now, then what will B do? Now let's say some repairs is required in Naushewa port. Now what B will do is look at the master database. Okay, in this database, X is there, A is there, Y is there, Z is there. These 4 vendors it will identify from the master database. Then it will contact those vendors. Okay, what is the time involved? What is the cost involved? So what are the things that you will do? How it will vendor evaluation will be done. So once the vendor evaluation is done, it will give the report to C. Okay, this is what these people are saying. Cost-wise, this guy is better. Quality-wise, this guy is better. In terms of access, these 2 guys are not able to do now. So all this report they will give, B will give to C. Once that is being given, C will select the vendor who is going to provide this repair and maintenance. So it will select, let's say A, it's fit to do this activity, give this particular job to A. Now A will be selected. Now A will actually do the repair and maintenance work. Are you with me? So these are the facts of the case. So now for doing this entire management, please understand repair and maintenance is one part of the activity. Apart from the regular monitoring and various other reporting, MIS reports, other reports, everything will also be given by B2C. Whole gamut of service will be rendered. Now, therefore, in the facts of the case, now please tell me, first of all, this particular B, it charges consideration month on month to the foreign vessel C. Now, please tell me, will this qualify as export of, first of all, what type of service it is? And will it qualify as export of service? Please tell me that. Request the learned members to give their input. First, let's see the basic aspects, then let's move on to complex aspects.
Will it fall in that exception to 13.3, Shravan? That provision which is there, like if it is there for repairs or maintenance, which is not put to use in India. So can we bring out that exception to 13.3 and bring out to residual clause? That is the one aspect I think we can.
Okay. So, madam, you're trying to fit in, and Anugunam, I think you're trying to fit under 13.3. So what I'm talking about is the service rendered by B2C, not the A to C.
C to A to C. Okay, it is B to C.
B to
Okay.
C. Now we are focused from B's perspective.
Okay. Okay.
So okay, one aspect is 13th. In fact, this was the notice. They tried to fit under 13.3. So I think you're with the department on this case. So they said 13.3 vessel is in India. Therefore, what is it? Performance-based service. So vessel is in India. It's in Naushewa port you're doing. So it's not export. So we'll deny the refund to you. So RFD.
Yeah, I think so that there is a common thing even in case of aircraft also.
Absolutely.
That is the same allegation.
Correct.
Absolutely. So yeah. So any other feedback quickly I can take, or can I move on with my questions?
I think let's move on with the questions.
Questions. Okay. So because again we have limited time today, so and we have very interesting cases lined up next also.
Yes.
So therefore, so here one of the allegations as Annapoorna was rightly trying to point out was 13.3 was invoked and it was performance-based service in India. It's being done in India. Therefore, refund is being denied. It's not zero rated. One aspect. Second aspect, and more interestingly, without prejudice was being used. This is one of the very rare cases I've seen show cause notice invoking without prejudice. Right. So without prejudice, 13.8 was also invoked. I was baffled. You say either you fall under 13.3. If you don't fall under 13.3, you fall under 13.8 intermediary. So therefore, if you fall under intermediary also, the place was applies in India only. Therefore, you're not entitled to refund. Why intermediary? Because please understand, here if B is not doing the activity by itself, it is connecting A and C. Therefore, you fall under the definition of intermediary. Therefore, you fall under 13.8. Therefore, you're not zero rated. Therefore, no refund for you. So either under 13.3 or under 13.8. This was the literal show cause notice, believe it or not.
Unique show cause notice.
Unique show cause notice.
But is B assisting in helping in the marketing of the sale, promoting the sale? That is the thing that needs to be checked, right?
Correct. Absolutely.
Absolutely.
13.8. Absolutely. So what we had.
Sir, is A raising the invoice directly to C?
A will be raising for his part of the service. He'll be raising it directly to C.
Okay.
For B's part of the service, he will be raising on a month-on-month basis because please note B's activities are continuous activity. It is not restricted to this repairs and maintenance alone. It will cover this repair.
No, it is only about, say, if intermediary services is being considered, then A must be raising the invoice directly to C, only then it will be. Yeah.
Yes,
Just
yes.
wanted clarity on facts for that.
Yes. So A will raise it on C, and B will not raise any invoice for this activity. As you rightly pointed out, Guruji, that for this activity separately, B will not raise any invoice. B is doing a whole gamut of activities. So including monitoring, giving reports, and so on and so forth. It will do like, I've listed on probably 4 services. It will do like 10 services under this contract, wherein a monthly billing will be there based on the time spent. So anyway, coming back to the this one, the one of the in fact replies that we had given was the show cause notice on a technical note. First, I'll finish off the technical grounds, and then I'll move on to the actual merits of the case. We had given a reply, in fact, saying that you can't pick. I mean, you can't afford to give a notice like this, where you can say either you take 13.3 or you take 13.8. So you can't. You have to be very specific. You can't be vague. The show cause notice can't be vague, as held in the case of Nestle in Supreme Court. So show cause notice has to be very specific. It has to classify the service. So therefore, it can't say either you choose 13.3 or you choose 13.8 and give it to the one. I mean, what is that? Being very ambiguous in this regard. So this is a very technical point we had raised. But apart from that, the major issue here was with respect to intermediary service. So 13.8, where we had focused our entire attention on. Now, whether this falls under 13.8 is the real moot point that is to be considered here. Because please note, if you ask me, 13.3 is directly ruled out. Here, B is not having any capacity whatsoever to do all this repairs and maintenance. It is a back office. It has absolutely no capability whatsoever to do this repair and maintenance. So therefore, we had argued 13.3 is not applicable because the actual repair work is not being done by B itself. So then 13.8, coming to 13.8, which is the interesting aspect. Now, will 13.8 apply to the facts of the case? That was the real thing. Now, answer is, if you ask me what we had argued, in fact, we had successfully argued at the appellate stage. We had got an adverse order, then we had successfully argued this at the appellate stage and got the favorable thing, wherein we had argued that this definitely will not come under the definition of intermediary service. Because please understand, this one activity is part of a whole gamut of activity. For this whole gamut of activity, there's a separate classification under, even under erstwhile service tax law, there are a number of case laws saying that this comes under a concept of ship management service. So therefore, if you see, go to earlier erstwhile service tax law section 65, 105, so on and so forth, there you'll find a separate a classification for ship management service before the negative list. Therefore, it is not an incidental, this is not a separate activity to be seen in isolation. Rather, it should be seen as an entire activity in toto, wherein it will come under the gamut of ship management service. Therefore, once it is classified under ship management service, 13.8 will not apply. Rather, 13.2 will only apply. And therefore, it falls under the general category. And the recipient being outside India, it is entitled to the export and zero rating benefit, so on and so forth. This was the argument we had taken. So, and we had also tried to successfully argue. So what do you all feel? Do you feel that?
And did
Shravan,
you also argue? Did you also
Shravan,
argue
on
that?
what?
Yeah.
Sure. No, I want to understand in that notice, if they have levied on intermediary, what was the reason given by the department? Like, on
Because
what base? Yeah.
B is connecting A and C.
Yes, as Gurjit sir has rightly pointed out that since A
Yeah.
is raising the invoice directly on C, so actually B has facilitated the supply of goods or services by A to C. So that is the condition of the department. But I feel
Then
here that A is
how
doing
are, sir, Arup sir, further than, but then how are they arriving at the value of the intermediary services? The
Yes, no,
entire
and
ship
I had,
management cannot be that.
Yeah.
yes, and I had another question also that A to C is a principal to principal transaction, right? It's a P2P transaction because B is nowhere involved in either fixing of the price or getting any of the commercial things done. I think it's a direct thing. How does it work?
Yes. So here B has absolutely nothing to say. So it just acts as a back office, wherein it just these vendors are also already empaneled with the C himself. So they will go say, this is the job 1, 2, 3 you have to do. So get the quote for that. Are you available first of all in this time frame? And second, if you're available, what is the time involved, cost involved, all those things, it will gather as a report and give it to C. As simple as that. C will ultimately choose the vendor. So as you, again, ST members have rightly pointed out, it falls under the exceptions to the definition of intermediary. If you see the definition of intermediary, what service A is rendering to C is a standalone separate service. And what service B is rendering to C also, if you see, it is on a principal to principal basis only, because here the incidental activity is one of the repair activities, one of the incidental activities, not the be all and end all of the service. So you can't artificially, that is what we had argued, in fact, you can't artificially vivisect, because now the question comes regarding valuation. You can't artificially vivisect one part of the contract and say an element of intermediary may be involved, and therefore this comes under 13.8 and definition of intermediary to section 13. You can't do that. You'll have to see the entire contract in toto, because the consideration is also for the entire contract in toto. It is not alienated or incidental to this one single aspect. Therefore, what the entire gamut of service is also a principal to principal supply between B2C. It is of a ship management service. Therefore, it falls under the exclusion clause of the intermediary definition. And this is also Circular 159. If you look at it, illustration number 4 also directly governs this particular aspect. So I request the ST members, probably all of you will be aware, but of this initial circular regarding intermediary. But if you look at this, it also covers certain illustrations. One of the illustrations directly covers this aspect. So, and I think we had successfully argued this circular comes to our rescue, and that this fits the case of a normal category and not an intermediary service, and therefore we are able to get the favorable order in this regard. So, any other views for this case? Now I want to, in the same case, I just want to move to a little more complex discussion. Any further views? We all, to some extent, believe that this will be an intermediary, or does it fall under the exception to intermediary?
Silence means that we all concur with your views.
All right. So anyway, so yes, so we had again, we are very convinced, because please note this particular B, the connecting aspect of it is one incidental aspect. And point number 1 is that these people are already identified by C. So therefore, I'm not doing the activity of connecting at all in the first place. They're already connected. And this point number 1. Point number 2 is that it's a gamut of service that this B is doing, not a single isolated service. Therefore, you can't isolate and reduce it to that of an intermediary, and therefore it falls under the exception. B2C is a principal to principal supply by itself, covered by Circular 159 also, which beautifully explains various facets of this intermediary service, and it's also directly governed by one of the illustrations. Anyway, now just taking this case study to a little bit of a higher, or we can say a little bit more complex discussion. Now let's assume for a second that B is not doing service number 2, 3, 4 as a entire thing together. It is doing only one activity, right? Wherein it is just overseeing the repair and maintenance aspect alone, right? So a ship management service is now being isolated to only a repair and maintenance management service. Please note, repair and maintenance management service. What is the role here is that, again, the other activities of giving monitoring generally, giving the reports, all those things are not there. If any repair is coming, what B will do, B will coordinate with the vendors, A, X, Y, Z, so on and so forth, same activity, what I have now told as far as this aspect is concerned. And it will identify the vendor and give it to C. This part of the activity alone being done. But please note, even in this scenario, where only an isolated service is being rendered, even in this scenario, the vendors, A, X, Y, Z, so on and so forth, they're already empaneled with C. What I'm doing, I'm just evaluating the vendor and giving it to C. Therefore, now in this scenario where the entire gamut of ship management is not done, but only an isolated activity of repairs and maintenance management is being done, and I am identifying out of the already empaneled vendors, I am identifying a particular vendor and saying that this vendor fits the bill and giving this to C. Now, in this reduced scope of the service, will this fall under the definition of intermediary? Hello?
Here again, we have a list, a database of vendors, and we are just evaluating to that part and then sharing it with C.
Arupji, your voice is a little fuzzy. Now, my question is, yeah, Arupji, you're saying.
Yeah, I think like, yeah. So I was saying that, yeah, now what I was saying is that we already have a database of vendors. So what he's just doing is that he's evaluating from the technical aspects or maybe the commercial aspects,
Correct.
and then choosing the final vendor and giving it to C. So in effect, he's not actually connecting to persons, or he's not helping A in doing his supply of goods and services directly.
Perfect. So absolutely, absolutely. In fact, that is what I wanted to reduce the equation to. If you look at 2 subsection 13, I'll read out again. All members are aware, just for the sake of this one. Intermediary means a broker or agent or any other person So this is where we'll have to really focus on. Broker or agent or any other person by whatever name called. So this is what we'll have to really focus on. Now, what we had in fact argued was, assuming in another period, this was the actual facts, wherein one part of the activity alone was done. So even in this scenario, we argued that 13.8 will not apply in this case because it does not fall under 213, subsection 13. Why? Because if you read along with Circular 159, the view comes as though that the definition of intermediary, if you see Circular 159, it clearly says intermediary means a broker or an agent. So it's an exclusive definition, not an inclusive one. So broker means a broker or an agent or any other person by whatever name called. Now we'll have to read these three words together. What we say, adjunct generis, right? So we have to read these three words together. Now, therefore, in fact, this is highlighted by Circular 159, wherein can a broker be really a broker or an agent be really an agent without identifying the actual vendor or the customer? He does all, see, a broker will do any, agent will do any number of activities. But what is this principal activity? You go to a real estate agent, you go to any other agent for that matter. What is this principal activity? Is to identify the vendor or the buyer or the seller of the property, right? He may do any other number of value additions. So he may get the legal thing done. He may get the valuation thing done. He may get the documentation part of it done. All those incidental activities he may do. But what is his core job? Is to connect the two people. So that, in fact, what comes out through the reading of 159. But you'll have to really appreciate that broker or agent by or any other person by whatever name called is also there. That was the stress of the department. But Circular 159 clearly says that or any other person by whatever name called has to be read with a broker or an agent. Therefore, it forms a separate subclass by itself. Therefore, a broker or an agent or any other person like them by whatever name called. That is what we'll have to really come out and interpret. And that is what Circular 159 also say. Therefore, we had in fact argued that a person, if he does not connect the people in the first place, but he do n number of other activities which an agent may do, then he does not become an intermediary, because the very basic fact of connecting is not done. Here, A and C are already identified, or XYZ, whoever be the vendor, they're already empaneled with that guy. I am not doing the activity of identifying the vendor, which is the predominant and principal activity of any intermediary. Therefore, we had argued that successfully, and the learned commissioner, additional commissioner was also kind enough to accept our views and in fact given a good judgment in this regard. Therefore, I hope any counter views are there. I request all the members to probably look at Circular 159, which expounds each and every facet of the intermediate definition. So wherein they had beautifully captured this essence of the first part of the definition also. Intermediary means it's an exclusive definition, broker or agent by any other person by whatever name called, but it forms a subclass. They necessarily have to do the function of an agent by facilitating or connecting two people.
Shravan, in many of the agreements, we are seeing that there is always an issue between this main supply and this ancillary supply also. So something can we just look into that, because there the test fails always for these intermediary services. So how can that be tested?
So probably okay. So probably Ankuran, if you can just give a little bit more context to the question, I'll be able to understand a little better. So you're trying to say main supply is what and ancillary supplies are what?
Yeah, see, like in your case, where there is an agreement to provide that repair and maintenance services. So we are saying that he's not connecting, he's basically providing the P2P services and not P2A services. So we are saying it's not intermediary. One more aspect, can we look into that the supply which is given by the concern that intermediary which the department is contending? We can also argue that it is not a main supply and it is a ancillary supply. So something, if we can try to bring out that test also, I think we can try to prove that it is not an intermediary. So that is one more aspect as just.
Perfect. So probably we can take an argument. Just to clarify one thing. So here B is not actually doing the repair and maintenance service. That is not the nature of the contract.
Yeah.
Here he is doing the repairs and maintenance management. The word management is of supervision. That's the more important aspect. Wherein he has absolutely no capacity to do any of these repairs and maintenance. He will just do what like we are doing in office. He will just connect the client to our resource and whatever. So something like that. So you can just put it in a very simple manner. So he has absolutely no wherewithal at all to do the repairs and maintenance. So in that case, it will come under 13.3. If he has capacity, absolutely. So in that case, he is doing repairs and maintenance himself. He's just subcontracting it to somebody else. So he then comes under 13.3. So whereas here he is just doing a back office service.
Management, yeah.
Whether, so already empaneled vendors are there. This is the scope that C wants to be done. This is the repairs that he wants to be done. 10 activities, 1, 2, 3, 4. Whether these activities are okay, who are the vendors capable of doing in this 4, and whether they are doing these activities correctly and signing off on the deliverable has been done or not. So this activity of entire back office only is doing.
Yeah, that is what I'm just trying to highlight, that he's not doing that main supply.
Main supply is doing the incidental supply.
Yeah,
Absolutely.
incident. Yeah.
That which forms a separate supply by itself from B2C.
Yes.
Perfect. So if I can move on, can I move on to the next case? So two different variants of this case we have done, and I tried to discuss on this. One more fact for all, or one more thought for all of you is here.
Sarvana sir, just a minute.
Yeah.
We were discussing about 13.3, but there is a second proviso already says that for such situations 13.3 cannot be invoked. Say ships coming there for repairs only. So are you distinguishing it from that proviso when you are discussing about 13.3?
You're talking about the second proviso, Guruji. I think,
Yeah.
So probably we did not get too much into the 13.3 second proviso because here B has absolutely nothing to do with repairs and maintenance. That was our defense, in fact. So if we try to fit ourselves under 13.3, only the second proviso will have to go under. Whereas here we are taken a view, this guy, So we have taken the standard,
Thanks.
Because this, So one more probably fact to, or this one to think over for all of you, why this entire, we'll have to think from the department side also, why this interpretation is coming. I just would request, I think we touched upon this in the last session also. If you look at the definition of intermediary service under section, this intermediary service is there in 13.8, correct? 13.8 says for these services, the location of the supplier itself shall be the place of supply. And one of the clause B is 13.8B is intermediary service. Whereas if you look at 2 subsection 13, intermediary service is not defined. It defines just who is an intermediary, that's it. Therefore, now comes the question when 13.8b says intermediary service, how should we really interpret this? There is no definition of intermediary service, please note. There's definition of only intermediary. Therefore, when 13.8b says intermediary service, how should we interpret this? Should we interpret as though any service provided by an intermediary will come under this intermediary service, or only the facilitation service as underlined under 2 subsection 13, that will come under intermediary service? So what will exactly fit into this 13 subsection 8 is really, I think, a point of trigger for all the varied interpretation. So to just put it very simply, 13.8b, when it says intermediary service, which is not defined by itself, so will it mean all service of an intermediary, or will it refer to the intermediary service of an intermediary? So this is something to really think about, but I'm not taking too much of time because again, we'll have to move on to the next case study. Just a point of thought for all of you, which I think many of the ST members here would have already noticed. Now, again, let me move on to the next interesting case. If I'm able to finish this particular case also, I'm very happy. I think we'll be doing really good justice. But again, this case has various sub cases, or we can say various different shades of the same case. So let me get on to it straight away. Now, this is a case involving the banking sector. This is again, you would have seen the newspapers getting highlighted so many times in the recent past. So I'll just tell the facts of the case. This is a card transaction, probably a credit or a debit card transaction. An Indian bank is there. Let me put the facts as a diagrammatic thing. I will not tell you, I mean, take you to the verbose, this one PPT. Now, let us take, let's say a bank is there in India and the customer is there in India. So this is India. So let's say A is in India. A is the account holder. Now, what A does is A has a credit card or debit card, whatever it is, right? So issued by a bank, let's say you can imagine any bank, ICICI bank, any public sector bank, whatever you want to imagine, let's say XYZ bank in India. So it is issuing the card. Now what A does is, he goes to, let's say, US. And he goes to, let's say, some shop, Walmart, or some other Walgreens, or whatever you want to say, some shop you can think of. So he goes to that particular shop and he swipes his card, right? So he buys from the merchant. Let me call the merchant B. He is the merchant. So he has a POS machine. So all of us are aware of this. So he has a POS machine. This POS machine is issued by a US bank. Let me call it as US bank itself. These are in US. So these are the facts of the case. Now let's assume A is buying certain items worth some $1,000. He's swiping his card for $1,000 going to USA, $1,000 for whatever purpose it is. We are not concerned about whether it's business or personal. We are not talking about the A's $1,000 transaction. Rather, we are going to talk about from the bank's perspective, both the bank's perspective. So something he's swiping. Now, how exactly does this settlement happen? I think many of the esteemed members will know here, but just for sake of clarity, how the entire transaction will work is that this particular merchant will have to be paid first. So he will be paid $1,000, but he'll be paid $1,000 by whom? He'll be paid by the US bank. So the US bank will pay this particular money to him. Hence, it is called as acquiring bank. For those who are able to relate quickly, if you look at the GST law, the exemption notification, so on and so forth, the rate notification, this bank in US is called as the acquiring bank. And banking terminology also, it is called as acquiring bank. So it will pay the money, but US bank will not keep quiet. So it has to recover the money. So it will recover the money from the XYZ bank in India. It will pay the money on behalf of A because it is XYZ card. It will settle the amount. It is also called as the issuing bank. It will settle the amount. So XYZ bank ultimately has to recover the money. So it will recover the money from A. And therefore, if you see from both the bank's perspective, this is a zero game transaction except for the charges. So this $1,000, what US bank will recover, probably a 1% charge will be there, probably less than that, probably. So let's say a $1 charge is there. So charge extra will be recovered. Now, please note this $1 charge will be split between US bank and XYZ bank. Let's say depending on the negotiating power, all that. Let me just for sake of it, keep it as $10, so easy understanding and easy reference. So let's say US bank will retain $4 and this Indian XYZ bank, Indian bank will retain $6 or recover $6 from it. So when this particular transaction happens, $10 extra will be recovered from the merchant, and out of that, in whatever ratio, it will be split between the banks. Now we are talking from the XYZ bank's point of view in India because we are concerned about the Indian bank only. Now, please tell me, esteemed members, this was the case. Now, in this case, will the $6 charges recovered by the XYZ bank in India tantamount to export of service in this particular scenario and hence be zero rate? Hello, am I audible?
No.
I'm not audible.
See, this $6 are recovered from Indian customer only, right?
No, it is recovered from B, who's in US. $10 will be recovered from B. And B may recover it from A, or he may include it in the cost, whatever it is. But ultimately, it is recovered from B only. Out of $10, it will be recovered by US bank. $4 it will retain. $6 it will pay along with the $1,000 to the XYZ bank. Probably, let's assume, what is that? 4:6. So $4 will be retained by US bank. $6 will be paid to the Indian bank. So now we are concerned about the $6, which is recovered ultimately from B, collected by US bank, and remitted to the Indian bank. So what is the view here? Is this $6 recovery tantamount to export of service? That's it.
Customer is performing the service. Bank is not doing any export of service.
Yeah. So first of all, let's go through the conditions of section 2, subsection 6 of IGST, wherein in this case, we'll have to identify the supplier and recipient. As we did in corporate guarantee, we took a big exercise to identify who the supplier and recipient is. Now, the basic aspect is who's the supplier of this transaction, who's the recipient of this transaction, and what is the supply, first of all. Now, my question, let me reduce the question in this manner. Can we take for a second that in this case, the XYZ bank is providing service to US bank, which in turn is providing service to B. This is option number one. So in which case, XYZ bank becomes a supplier of service, there's no doubt, providing part of banking service. He is the supplier, no doubt about it here. Who's the recipient? Is it the US bank or this first option? The US bank is a recipient bank, and US bank is in turn providing some back-to-back service to the B. That's a separate transaction by itself. So this is one aspect of interpretation. Second aspect is, can we take for a second that US and XYZ bank together are providing service to B? This is very interesting. Why, I'll tell you. The next leg of the next variant of this transaction, which I want to discuss, this really comes in handy. Arupji, again, your voice is a little fuzzy.
Sorry, there is some issue with the mic. So I
Yeah,
hope.
no
So I think there are two legs of transaction, as you rightly said. So foreign bank is providing the supply to the Indian customer first.
Yeah.
I think, and in another leg, the Indian bank is providing the services to the foreign bank of connecting a particular person to the foreign bank.
Yeah, perfect. So, so this is absolutely one interpretation, definitely, which is possible. And in fact, this is the normal view that is being taken. Please understand. So to carry out this transaction, if you can imagine from a banking's perspective, what is a US bank doing? It to successfully complete this transaction, first it has to provide this POS mission to the foreign person B, US person B. That aspect is being done by the US bank. Whereas what does the Indian bank do? Indian bank issues the card which is swiped at the POS machine. So it's the issuing bank, whereas US bank is the acquiring bank. So therefore, you can definitely say that these are two separate transactions, one being done by US bank to US merchant, second being done by XYZ to either. That was my question. In fact, there's a third interpretation possible where this export really can be denied, or zero rating benefit can really be denied. Is XYZ providing service to US bank or to B? It does not matter. See, because both of them are located outside India, and all the other conditions will be satisfied. But a third interpretation possible is that the $6 that XYZ bank is getting, why it is getting? Because it is issuing the card to A, who's in India. A may have gone and swiped it outside India. The actual performance of this thing does not matter. But if you look at XYZ is providing to its customer, it is issuing the card, hence is the issuing bank. And for that card transaction, only the $6 is being collected. Therefore, in this case, this interpretation, third interpretation is being taken. Then in that case, this will not fall under 2 subsection 6. It will not become export. Therefore, zero rating is also not possible. So what do you feel? Who is the privity of contract between? That is my real question. Is the privity of contract between XYZ bank and US bank, or XYZ bank and B, or XYZ bank and A?
So I think here you have to go with a mix of income tax also, that ultimate beneficiary concept.
Ultimate beneficiary.
Yes.
Good, nice. But because now after Safari, we'll have to refer to, closely refer all income tax jurisprudence also. So perfect.
Yes.
So thank you for reminding. We'll have to definitely now broaden our horizons and cross-interpret all this also wherever required. So
that is also one interpretation that you have rightly shared, that ultimate beneficiary in this case is the customer in India to whom I'm providing. And maybe new 10(1)A will give some other, that will also give a perspective. When in case of B2C transaction, if you know the address of the person, that will be the place of supply.
All right. So that's a view, a welcome view. So probably 10(1)A, I understand that this ultimate transaction is regarding this $1,000 transactions regarding goods only. But the ultimate charge for which it is, the $6 charge is for the banking service. So yes, but probably it may give a definite, way to interpret this particular aspect. Good thought process. So anyway, just would like to highlight so the privity of contract is between whom? That is the central question to this particular case study. I would like to invite all the learned members attention to section 2 subsection 93 of the CGST Act, not IGST Act, section 2 subsection 93 of the CGST Act, wherein the recipient of supply has been defined. In fact, recipient has been defined. So it says, if you have a look at section 2 subsection 93, where a consideration is payable for supply of goods or services, so on and so forth, person who's liable to pay the consideration is deemed as the recipient. Now, this 2 subsection 93 itself is a worth topic for discussion, because in some aspect it feels as though it is overriding the provisions of Contract Act also. The entire moot point here is, I want all of you to probably appreciate, or all of you definitely would be appreciating this, is that the privity of the contract is the real question here. So whether the Contract Act should dictate who the privity of contract is between, the actual terms of the contract should dictate, or should the GST law dictate? Is it a question of fact? It's a de facto question or a de jure? Is it a question of law? That's my question. So anyway, 2 subsection 93, if you look at it, who's paying the consideration? That is the real question. So if you take it in a literal sense here, US Bank will collect the $10 charge and US Bank will pay part of the charge to XYZ Bank. So therefore, if you just take that alone and interpret, probably you can take a view that definitely US Bank is the recipient of supply in this particular case. Or another view is possible, where this second option, second view gets more weightage. We can say that if US Bank and XYZ Bank are together providing the service to B, then in that case, even assuming the $6 is part of the $10 charge, even in that case, B is only paying the $10 charge. So even assuming but not admitting that US Bank is a recipient, then even in that case, B becomes a recipient. Let's forget whether it's a joint supply by US and Indian Bank or an individual supply. But we are clear that the recipient is the B in this particular case, even going by the definition of recipient under section 2 subsection 93. Therefore, in this case, if you ask me, ultimately it is a card service, and as far as the card service is concerned, XYZ and A are the contracting parties, but as far as the charges are concerned, B becomes the recipient of supply in terms of section 2 subsection 93, and therefore we can take an argument that it fits under 2 subsection 6, assuming all the other conditions are satisfied, and therefore it is entitled to zero rating benefits also. So this is the view. In fact, we had taken and argued. Case is not yet over, but I think we have a very good case in this regard. So any other opinions here? Any counter view? So the moot point here is the privity of contract is what I would like to say, whether it should be dictated by the facts of the case read with the contract law, or should it be dictated by the GST law? So that I think what Arupji was saying is beautiful. In that case, 10 subsection 1, if you look at the new amendment which has come, that also seems to like go against the general understanding of the privity of contract. So anyway, this is something to ponder over. Any views here?
One more thought, Shravan. I don't know to what extent, like depending upon your terms with the US Bank, can we try to fit into 13.8A where the services are given by this banking company, and because there is some way the US Bank is also involved in this transaction. So whether the department can look into the services which are given by a banking company under 13.8A and where the place of supply is location of supplier. I'm just thinking one more aspect on that. Might be.
I was hoping nobody will go to 13.8 because that is again a point of interpretation. Unfortunately, Annapurna again, hats off to you for pointing out the very obvious thing. I hope nobody will go to 13.8 because that itself will take another 10 minutes for discussion.
Yeah,
So
just
what I would. Yeah, perfect. So in that case, no banking service can be a zero rated if you go by 13.8A. But here again, I would request the attention of all the members to 13.8, which I think, see, when I say I have spoken in many forums, probably I have appreciated the law in many respects where it is good, drafting is really good. I have also probably tried to highlight a few cases where the drafting probably is not that great. So two classic examples are 13.8A and 13.8B, where I already pointed out to 13.8B and really tried to point out that intermediary service, what is the meaning of that? There's no definition. So does it refer to all service of an intermediary, or should it refer to only the facilitation aspect of it? It's not very clear. Same is the case with 13.8a. If you can, the honorable members can have a look at it, respected members can have a look at it. 13.8a, if you look at it, it also says service supplied by a bank or a, what, a NBFC or a financial institution to its accounts holder. So if we are able to take this particular 13.8a and see also, in that case, does it mean to say only the banking service supplied by a banking concern to its account holders, or does it mean to say any service for that matter supplied by a banking company to its account holders? So that is also something to ponder about. But yes, Annapurnaji, so to again put things very simply, that is one of the counter arguments in this case. If that 13.8a is taken, probably then none of the service provided by a bank to its account holders can ever be a zero rated transaction.
Yeah, thank you.
But
And
again,
here
now
again-
comes the
and
question.
here again, I think we can also think on this perspective, do introspection on that. Location of supplier or location of recipient is outside India. So again,
Absolutely.
location of recipient is in India or outside India, that will again come into perspective.
Absolutely. And Annapurnaji and Arupji, just to add, is this transit? That's why I was stressing on a very basic aspect. Who's the recipient of service here? Is it A, who's the account holder, or is it XYZ bank? What is that? US bank in US, or is it B, the merchant in US? Who's the recipient of the supply? That's my trigger thing. If you are admitting for a second that it is either US bank or the person B who's in USA, then it does not fall under 13.8a also, because here it is not a service to account holder. Please note, B is not an account holder in Indian bank. Only A is an account holder, and definitely not. What is that? US bank is definitely not an account holder of the Indian bank. So those two persons sitting in USA, they are not account holders. Therefore, in this case, if we are admitting for a second that the recipient is either of the person sitting in USA, then probably 13.8a will also go out of the window, and therefore we may still claim zero rating
Okay.
because it covers service to account holders. Anyway, now why I'm trying to point out, these are cases again which definitely will be. This case, in fact, was recently reported. It's a very hotly debated case in the service tax era. Now, last week, in the case of Citibank, I'm not sure how many of you have really observed this. It was really reported. In fact, in the din of Safari Retreat judgment, many other good judgments which have come, including the royalty judgment and the other judgments, have really gone under the radar. Everybody is focusing on Safari, but so many interesting things are happening in the Supreme Court. So one of the interesting things which I was, in fact, noticing was that of the Citibank case, where I mean, like 10-year, decade-old litigation has been finally put to rest in this very same context, which I'm trying to point out. Now, here a little bit difference in the facts of the case. Now we have discussed case A. Now let's discuss case B. Case C is very similar to case A, so let me not bother. I think if I finish case B today, I think the session I'm really happy about that one. This is in fact the facts of the case of the Citibank case, which was recently decided in the Supreme Court. There are conflicting tribunal judgments. Being an issue of, in fact, classification, the matter directly went to Supreme Court. As all of you know, in service tax era, the question regarding classification and valuation, there's no appeal to High Court, there's only appeal to Supreme Court in the service tax era. So therefore, the matter directly went to the Supreme Court, being conflicting tribunal judgments were there. There was a larger bench of the tribunal judgment favoring the assessee. So, and ultimately the matter went to the Supreme Court on appeal by the department. Now, what are the facts of the case? It is very similar to what we were discussing earlier. Now, let's say Indian bank is XYZ bank in India, and its customer is, let's say, A in India. Now, what A in India is doing, he is not going and swiping the card in a POS machine. He is going to the ATM. He is going to the ATM of, let's say, the US bank. He is going to USA, traveling to USA. So in USA, he is going and withdrawing cash of, let's say, $1,000. Same thing, but he's withdrawing cash of $1,000. Now, what happens in this scenario? The facts of the case change a little bit. So this is where I want you to really appreciate. Will the small change in the facts of the case really change the privity of contract also? That is where you have to look at it here. Now, here what will happen? A will withdraw cash. US bank will be, I mean, it will pay the amount initially. then it will recover the amount from Indian bank. So Indian bank will reimburse the money to US bank. Indian bank will also not keep quiet, able to recover the money from A, who's the ultimate withdrawer or its customer. It'll recover the money. When it recovers the money, it will not recover $1,000. Account will be debited for, let's say, $10 extra, being the bank charge. It will be $1 less than that. But for easy calculation purpose, I'm saying $10. So when XYZ Bank is debiting, please note here, XYZ Bank will be directly debiting A's account. This is where I want you to really pay attention. Small change in the facts of the case. So XYZ Bank is directly debiting A's account in India of $1,010. Now, what will happen to this $10? Of course, XYZ Bank in India cannot retain the entire $10. Why? Because US Bank has created the ATM infrastructure. It has to earn some money out of it. So therefore, out of this, let's say some $4 is being given to XYZ Bank. Ultimately, you look at from the bank's perspective, similar to the earlier transaction, $4 US Bank is retaining, $6 the Indian bank is retaining. So I request the respected members to tell me, in this ATM withdrawal transaction, ATM charges, will the $6 which are, okay, let me talk about the $10. What will be the, let me put a very broad question first, then we'll go to the specific questions. What is the treatment for the $10 in total, the ATM charges being recovered? Anybody? $10 being recovered by XYZ Bank.
I understand it is the service given by the Indian bank to its account holder.
Perfect.
And then there is a second service relating to what the Indian bank would be reimbursing to the US bank. That would be the service given by the US bank to the Indian bank. This is my understanding.
Yes. So, Vishalji, thank you. So I think this is exactly what was the facts of, the question of debate in the case of Citibank before the tribunals and the now recently the Supreme Court. Now, again, I ask all the members a question, respected members a question. So Vishalji's interpretation is one of the interpretation put forward by all assessees. So put forward by the department, in fact, because if you see in that case, will the $4 which are being paid, this transaction by XYZ to the A in India is treated separate, and XYZ Bank in India to US Bank treated separate, then please note this $10 will anyway suffer GST in India because of the transaction to its account, as Vishalji was rightly pointing out. We will not refer 1388 because it's a domestic transaction. Rather, it is normally it will be liable to GST. As simple as that, because its entire transactions within India. The second leg of the transaction, if you look at the $4 remitted to US Bank, that $4 will tantamount to import of service, is it not? Therefore, RCM will be applicable for whatever charge being paid by XYZ to US Bank. RCM will apply being an import of service. So this was the entire demand which was raised. It was not a question regarding $10. Rather, it was because everybody paid GST on the 10. All banks paid GST on the $10 being recovered. The real question was, the $4 remitted to US Bank, will I again have to pay RCM on this? See, ultimately, I'm able to take credit. And please note, banks generally take 50% credit. As all of us know, now Rule 38 and the erstwhile SENVAT credit rules also had a similar provision. But there were different interpretations saying for card transaction that 50% transaction is not applicable. Anyway, let me not go into that debate separately. But the entire pain point came where I will pay the RCM, no problem. But out of the $4, whatever GST I'm paying, 50% is denied for me. So therefore, from the Indian bank's perspective, straight away it's losing 50% of the ITC. So therefore, please tell me, learned members, that will the second transaction be liable to RCM being import of service under IGST? Let's quickly wrap it up. Probably, I think we're almost near the discussion. Now, just to speed things up, again, the question comes, the privity of contract is between whom? As Vishalji was rightly trying to point out, do we take it as two separate contracts? Or this is one interpretation. Second interpretation, is it a joint service provided by both the banks to the customer in India? To ensure the successful completion of this transaction, US Bank has to have the ATM, Indian Bank has to do the card, both have to be there, both have to meet, then only this transaction will happen. So is it a joint supply by both the banks to the Indian customer, in which case this $4 paid is part of the margin or the consideration. It is not a separate transaction by itself. It's a joint supply.
Yes, I would go with this view that it's a joint supply only. As you have said that for successful completion of the service, you need to do it.
Yes. So, in fact, this is, if you look at the earlier scenario also, even you assume it as a joint supply, even still the Indian bank was entitled to export benefit. Same is the case here. So that was the moot point argued by all assessees' point of view. It was argued as a joint supply. Therefore, this $4, you cannot isolate it separately. Anyway, the $10 is suffering GST. There's no question of paying GST on the $4.
So
this
double
was
jeopardy may come into question.
Exactly. So this was called as
Excuse me, sir. Sir, even if we are considering it as a joint supply by both these banks,
Yeah.
why will this $4 not suffer any GST?
Yeah. So in that case, please note it becomes part of the margin. It does not become consideration for a separate supply. When we say it as a joint supply, there's only one supply, jointly done by two service providers or two suppliers to one recipient. There's no question regarding the recipient here. It's A. But who are the suppliers? It is both together. So therefore, it becomes a part of the consideration being remitted to the US bank, in which case, we assume they are joint suppliers. If at all anybody is liable to pay RCM, it is the customer A in India who is anyway exempted from RCM, being it's for personal purpose. So therefore, anyway, exemption is there. But let's not go into that. Now, my question is entirely from this bank's point of view. So if both of them are considered as joint suppliers, then where is the question of one supplier paying consideration to another supplier? It is just a part of the margin or part of the share of the charge being transmitted by the Indian bank to the US bank. It is not consideration per se, paid by one bank or another bank for some service rendered between itself. So,
I think
yeah.
so we have around last 2 minutes to prepare Maggi noodles, so we have to wrap up it.
So in fact, this was the conflicting judgment. So many tribunal judgments this side and many tribunal judgments saying it's a joint supply, therefore no need for reverse charge from the ASSI's point of view. Larger bench, in fact, was siding with the ASSI's. Finally, matter has been put to rest with the Supreme Court in the case of Citibank, wherein it has been held to be a joint supply. And this $4 remitted is part of the margin or part of the charge which is being remitted back. It is not a separate and distinct transaction per se. And this $10 anyway is suffering GST, and therefore there's no separate RCM requirement for this particular transaction. This was the landmark. If you ask me, this is also another landmark judgment which has come in the context of Citibank. So let's all get out of Safari for a little bit, and let's all focus on some other judgments also which are interesting. Probably I thought I will bring this to light.
Sir, this is in
So-
respect of service tax or GST, this
Service
Citibank case?
tax.
Ah.
Service tax.
Because, sir, in service tax, in many services, the service requirement were also linked with who is the service provider and who's the recipient.
Absolutely.
So whether that may change the answer in GST.
Absolutely. So section 2, subsection 93, which we were referring in the earlier case, probably may have something little more to add from the GST perspective, because who's paying the consideration? That is the real question. So here, in my opinion, Vishalji, the service tax judgment will also hold good in GST, despite definition in section 2, subsection 93, because the entire ratio decidency of the Supreme Court judgment was that the consideration is being paid only by A in this case. What XYZ Indian bank is paying to US bank, that is not consideration. So in which case A becomes the recipient of the supply. So and whatever is being paid by the Indian bank to US bank will still be part of the consideration only. Therefore, in my humble opinion, probably what you said is absolutely right. We'll have to relook at it from GST perspective. But in my humble opinion, this judgment in service tax era will still hold good in GST era also, despite section 2, subsection 90.
So as a closing remark, I think we need to introspect whether it's a subcontract, whether here the foreign bank is giving service to the Indian bank or not. So all these things can be checked. And Shravan sir, as you rightly said, so we'll discuss this case study. I'll try to have this case study discussed in the next week itself. And let us speak to some senior advocates and with the matter, and maybe we will.
And I agree actually with Vishalji what he was trying to point out. Even though we argue for the RCM, I believe that this will definitely suffer RCM. This will be liable to RCM. This is what I personally believe. But there's one famous adage by Privy Council Lord, which says all Supreme Court decisions are final not because they're correct, but they're final because they're final, right? So they're correct because they're final. So probably that logic will also apply here. So anyway, Arupji, thank you. Again, with this, I think I'll stop. I'll over to you.
Thank you very much. I think it was a wonderful deliberation that we had. And thanks to all the participants for contributing and investing the most important thing for your life, which is your time of 1 hour for SMS. That means a lot. And so we are looking forward to next week. So as Shravani sir has rightly shared, we will try to have the discussion on the Citibank case study and any other case study that you suggest, because Rajiv Bansal is not important for us from GST perspective. So we will discuss that. Any other case study that you are sharing, that the case study from the point of view of direct taxation, apart from suffering retreats.
Yeah, thank you all. Thank you, Rupji, again. Thank you all for the opportunity.
Thank you very much.
Thank you.
Weekend ahead.
Thank you very much, everyone. Arupda, Sarvanaji, thank you.
Thank you.